Hey, I'm joined now by Colin Fisher. He's the CEO of StableView Asset Management again. Colin, welcome back.
Thanks for having me.
Have you been watching what's going on in the cannabis world?
A little bit.
And
more of a spectator than participant.
Okay. Does it make you envious as a Canadian technology investor?
I mean, you'd be stupid not to be. I mean, the cannabis space has sucked a ton of dough out of the capital markets. You know, it's interesting, Venice Solutions, one of our core holdings, recently raised $115 million US, but it was all private US equity funds that came in. Mm-hmm. Probably one of the preeminent Canadian tech plays just got stolen under our nose. More value will be created with that company than 70 or 80 different cannabis companies that are currently being funded.
Really?
But, oh, easy, without even breaking a sweat.
Okay, so tell me how will that happen?
There are going to be a lot of winners in the cannabis space,
right?
But not unlike the internet of 2000, the dot bomb of 2000. There's very few that are going to survive the overall hype and hubbubaloo that's going to go on. So, you know, a friend of mine calls it the dot bong.
Dot bong. Ooh, yeah. That's good.
Yeah,
that will get some traction.
I think it will get some traction. And so, you know, from my mind's eye, I think that if you look at the amount of money that's being put into this space, there's so many companies that have to backfill the valuation, right? Mm-hmm. And you and I have had conversations about this, you know, the utilization of the capital markets to raise a ton of dough and then to backfill the valuation by building an actually good company. The problem is that we are doing this day in and day out in the technology space, but a lot of it's in the private world. And you know, there is a massive funding gap that we constantly lament in Canada. We see the superclusters being built across Canada. The government keeps trying to get involved. There's all this money that's being thrown at it from the government, but yet they don't understand the underlying problem is that when you have, for example, flow-through shares, and flow-through shares that you can donate to a charity, and you've created this taxation arbitrage opportunity. Well, how do you get money out of these things if everything we're doing is taking risk out of, or just has to have a story, right? So when you have a real company like a Venice Solutions that gets $115 million from US, and you see it in Difference Capital comes out, and you know, the Weckerly on the Globe and Mail and says, you know, we all these, you know, I like the, you know, I didn't make up this expression, but it says, success has many fathers, failure is an orphan, right? Everybody comes out and says, hey, we invested, we were the primary investor,
right.
This is us. And so you look at these companies, you go, am I jealous that money, you know, to your original, am I jealous? It's not so much jealous as sad.
Right.
Sad that we have all of these companies right now that are building great wealth and employing a ton of people and are going to be the next generation of category killers in technology, and we're just letting them slip out the back doors at pennies on the dollar.
Right.
And that's why we do that tech event, you know, that you had me on for our StableView tech event. So
sure. So the way the Canadian capital markets are sort of subsidized on a favored basis by according to certain industries, sort of makes us an incubator for U.S. opportunistic
100%.
accumulators.
You know, one of the things we're about to launch is a publicly traded company that's going to help fill that funding gap in Canada. I think there's a lot of people that are looking for a vehicle that will allow you to get access to both the private and the public space. I'm not ready to announce it just yet, but you know, it's a massive funding gap. But the problem is that we constantly are having people come in and try to solve the problem with artifice. It has to come from the capital markets. We have to solve our own problems. Mm-hmm. You know, we're not unless we want to be a nanny state of capital markets where everyone has to come in and, you know, the flow through was originally there to help get it into a really risky area. Well, it's gone completely the other way to the point where there's zero risk now. So you can take the worst project on the planet, but if it's flow through eligible and you can then dump the shares to a charity and create this trade, you've got a ton of dough that will go into that. You know, it makes sense if you have that as a tax problem. But what it does do is it dislocates the flow of capital into those things that are good companies or bad companies. So you can take, you know, a heaping pile of feces of a mining project, and it will get a ton of dough. Whereas, right, because of the flow through and the tax arbitrage that you're able to play. But in the same instance, we can't get money to go to a Venice Solutions that's going to be a preeminent category killer, and we've just let it walk out the back door, and everyone was celebrating this. And I'm happy for the management team, but I'm sad for the capital markets. I'm sad for the bigger guys that aren't able to see this deal flow, because they're constantly lamenting, oh, you know, we don't see this stuff. Well, it's because we don't finance it. Right. And if you don't finance, you don't grow it. So
tell me about Venna. What does Venice Solutions do?
So corporate performance management. So basically what they do is when you are doing budgeting or planning, or some people call it business performance management. And so what they've essentially done is they take all of the Excel spreadsheets that a company uses for planning that gets thrown across the corporation one end to the other. And Excel has one critical flaw. It's not auditable. Like, so if you screw up a cell, no one knows. If I need you to do these 10 cells or these 10 worksheets before somebody else can do their work, then what you find is that they're unable, you know, there's no workflow capability in Excel, there's no ability to audit. And so what this does is it took Excel and made it a front-end system, because everyone understands Excel. A lot of businesses kept trying to replace Excel. Mm-hmm. They said, use the interface. They put a database that maps into the Excel and allows it to say, you get these 10, and we put a workflow in it, and then Jane has to do her stuff, and then they can work with that. And it keeps going on, and then every time a change happens, there's an audit report. So the auditor can go in and see exactly what's happening.
So it's blockchain.
You're looking for me to flip this table and pound you into the fucking ground, aren't you?
Whoa! Hey, I always said blockchain was nothing more or less than the next iteration of Excel with certain features that allowed it to be auditable. So to hear this from the other direction, to me is...
but blockchain, but it, you know...
Blockchain is...
Okay, first off, distributed ledgers have been around for a long time. It's not that new. The idea of linking them and making sure that there's a single source of truth that is unhackable is the primary difference between a distributed ledger and blockchain. It may seem like a semantic, but it's an incredibly powerful difference. The problem is, how do we replicate that and make it efficient, different types of proof of work or proof of authority or proof of stake? What are the methodologies for allowing those who are going to use that? That concept is incredibly powerful, but there's all of this extra noise that went on top of it. You know, the concept of tokenization, which is cryptocurrencies or Bitcoin and this and that and the other thing. You know, we as two people you've probably used tokens since you were a young child, and I use tokens all the time. And it's called a coat check. Right, so the concept of tokenization, so it's proof of ownership.
Right.
Right. So I don't want your jacket and you don't want my jacket. We're two different heights, different length of arms. We want what we want. So we use the tokenization. So that concept is also not new, but the application of it with the ledger that is now immutable becomes a much more interesting concept. The user interface, which is the wallet right now is in my opinion is not a feature. It's a bug. They're horrible. That's where you had I think Parity Wallet was the one that crashed, and 250 million of Bitcoin. Or was it Ether? I think it was Ether. So right. You know, that which it is very interesting, but it's a subtle problem. But what you're referring to is not a blockchain thing.
Right.
You and I had this debate, and
we did.
We'll have to beat each other up again on it another day.
Yeah, no. But getting back to Venice Solutions, they've taken Excel and created a
workflow around it. They created a database behind it, and they created the ability for it to become auditable. So those are some of the key preliminary concepts. But a lot of other companies that tried to replace Excel, they tried to pull Excel out. Well, you have to understand the ability for people to utilize Excel, the amount of knowledge, how many people know how to use Excel, how many skilled people are out there. So your total cost of ownership, if you have to train someone up on a very particular specific piece of software, and they don't know how, and then you lose that person. So you've put $40,000 to train that person off, and off they go, and now somebody else, you got to constantly, but Excel, everyone knows how to use. So the ability to utilize, adapt, the adoption of it is critical. So, I think these are the types of things, like the total cost of ownership and utilization and adoption of software is another whole element, which is part of understanding technology. Like, one of the reasons Venna has done so well is they're not trying to push a rock uphill, because they have a massive user base of all these people who have Excel spreadsheet, and now they're like, whoa, you can augment that which we have already built, and you can make it auditable, and all our workflows and all our systems stay in place, and we don't have to reinvent the wheel. That's why the adoption curve has been so phenomenal with these guys, and their rate of success has been so great. But here we are. I remember when we first invested in, I was at an investment conference, and I thought, oh my God, this is one of the greatest inventions of all time. This is like literally a fantastic company. I called up the investment banker the next day and I said, I want to lead this deal. Well, no one, I thought for sure I'd be like the clamoring. No one. Crickets everywhere. So that's when I realized, well, there's just this gargantuan problem in the investment mind. First off, the understanding. And then here we are years later, the revenues have grown significantly. The company is well run, and we let 2 US firms come in and steal this company. They're not bad companies. I don't blame the Americans. I blame us for not financing the company. Yeah. So right now we have a orgiastic frenzy funding weed companies. But I would submit to you, going back to another time I was here, is that, if you have LeBron James playing 50 other LeBron Jameses, you have a chaotic environment. Pick a LeBron James that's going to win. It's very difficult. But if you have LeBron James playing you and I, it's pretty easy to pick. And so the difference between chaos and disruption is a LeBron James playing you and I is disruption. A LeBron James playing a bunch of other James is chaos, right?
That's a great analogy, actually. Okay, so how do we solve this problem?
Well, that's one of the reasons why we're looking to put this publicly traded company vehicle, because I think what you need to do is create an environment that money can be in a supportive environment. So, but writ large, we don't have it right now in our DNA. We have a bunch of, the old concept of required but not sufficient. We have a few of the things that are required, but we just don't have the sufficient ecosystem right now. There was an article in the Globe saying the other day that there was a slugfest amongst the banks to lend money to tech companies. And I'm like, that is the most disingenuous article of all time. So that's like saying, imagine you take a Brad Pitt and a Halle Berry, and they have all this attention being thrown at them. And now all of a sudden you've added 3 more people or 6 more people or 10 more people. It's just being thrown to the same people, all right? They're already getting the attention. The companies that they are purporting to potentially put financing in front of, and maybe it brings the interest rates down a few points on the type of debt that's being lent to them. But the vast majority, the unwashed masses of all our tech, is not getting these lineups. So the best of the best may get a little bit of a better deal, but that doesn't mean, like, slugging it out over the same well-known hot companies that are doing well is not some big slugfest. That's not, and it's not for sure changing the infrastructure and the landscape of tech in Canada. So yeah. So anyway, one of these days I should actually talk about. Do you want to hear a company I actually like in the public markets?
Tell me,
because we never talk about that stuff. One of my companies is selling assets into another publicly company called iLookabout.
Yeah.
So iLookabout is a publicly traded company.
Yeah, I think we've had them on the show, actually.
Have you?
Yeah.
Okay, good.
Trying to remember what they do.
So they do, at the end of it, what they currently do is they create a pricing or valuation for the purposes of primarily MPAC, Municipal Property Assessment Corporation, to create a price upon which they will do taxation. So they will let municipalities know whether you're undercharging or overcharging. If you're overcharging, you're creating a potential liability in the future. If you're undercharging, then you're losing revenues at present time. So they're in the process of making an acquisition of assets from a company called Clarosity. What they do is they're in the US and they do pricing upon which other companies then do provide a service. So lending, so they'll lend, they'll say, okay, so we'll lend, we'll give you
based
a mortgage.
On a valuation.
Give a valuation. So once you have that valuation, then you can provide a whole bunch of different services. In the case of iLookabout, they do it for the purpose of taxation. For the case of Clarosity, they do it for companies like Fannie Mae, Freddie Mac, USDA, large corporations. And so they provide either insurance product or lending against it, all of those types of services. So the combined company is going to be a very efficient platform across. It also allows iLookabout to expand into the US very quickly. Gary Yeoman founded Altus, so which is $1 billion company, so AIF. He also was the founding investor in Real Matters. And so this is a guy with deep industry expertise. He's built or helped found or build billion-dollar companies in the past. And I'm always of the opinion, if you built a billion-dollar company, the chances of being able to build another one is much higher.
Right.
So, so I think, and the other thing too is if you do any analysis on the two companies, because they're public, and you take the share count and all that stuff, iLookabout post-acquisition will be trading at about 0.5 EV to revenue for the next 12 months. So very, very good valuation. The deal's built to be accretive to anybody, both buying now or buying in the future, and for all participants in the deal. So it's a good deal. So that would be one of the types of companies where, and going, one of the things that's interesting, they are building a blockchain solution for information in the real estate industry. So real estate is a very low-tech, data is tough to get. It's hard to know where it's coming from. So one of the things they have is what's called an AVM, which is an automated valuation model. Okay. But if you get this data from a whole group of sources, and let's say downtown Toronto, you're using an AVM, no humans look at it, and you could say, okay, the data is strong, so we say we have confidence in that data at 95%. Okay. You could say, okay, fine, we're going to use the AVM. But at some point in time, let's say now you're in Newton Brook, Ontario, is that maybe only 50% confidence level on that data. So maybe you go, okay, AVM is not what we're going to use. So Clarosity, for example, has what are called hybrid solutions. So that's half human, half technology, and the combination of the two makes sure that they provide a very accurate solution. So they're in the process of actually creating a data integrity or confidence level for their products across the board, but they'll have AVMs, hybrid, they'll have traditional, and then they have the tax component. And so between all of those components, because one of the things, for example, that Clarosity does is it provides valuations. So let's say you're a portfolio manager and you have a large swath of properties, and what you want to do is test throughout. So you'll do sampling to make sure that the valuation of that property, of that portfolio, can be relied upon. When they're doing some of those samplings, one of the other things, the second biggest cost next to if you have mortgage on it, is your property tax. Right. So then you could be doing a secondary analysis to make sure, oh, are we paying too much, are we paying too little? Right. Should we be making appraisals against this? So the Venn diagram of these two companies coming together in terms of both cross-selling and that which their clients need is almost 100%. So it's a very interesting deal, and I've never come on and actually spoken about a stock, and I thought maybe one day I would.
This is the day. Yeah, all right, well, that's awesome, Colin. Well, we're going to have to leave it there for now. Sounds like we could probably do a show around your investment activity. I think we'll have that discussion next. Okay. Anyways, thanks for joining me today.